I think this is an asymmetric trade right now because if I'm wrong and it'll be roughly where it is right now at the end of the year. But if I'm right, I think it's going 150. I don't think it goes from here to 100. I just don't think that happens in something like Bitcoin.
Scaramucci begins by emphasizing that Bitcoin is behaving exactly as it has in previous cycles. According to him, the current downturn isn't something new. It's a cyclical correction consistent with Bitcoin's well-known 4-year halving rhythm. The Bitcoin network operates on a halving cycle that reduces supply issuance approximately every 4 years. Historically, these cycles follow a pattern: accumulation, rally, correction, and then a powerful second leg upward. Right now, Scaramucci believes we are transitioning into the second half of that cycle, a phase that has historically led to strong price appreciation. He points out that Bitcoin likely already hit its intra-cycle low around $60,000, and despite global chaos, it's holding up remarkably well. That resilience, in his view, is a bullish signal.
I saw along a lot of BTC. I think that you're not going to get the Clarity Act deal done this year, so it'll probably put some pressure on BTC right now. But we're heading towards the second half of the halving cycle, and usually when you're in the second half of the halving cycle, which we are, by the time you get to October, right? Because then that'll be 18 months for the next halving. You start to see a rise in Bitcoin. So this is cyclical downturn, very consistent with what's happened in every other 4-year cycle. And I think we touched our intra-cycle low of 60,000. It's trading pretty well here, given all the commotion in the markets. And so
any prediction for what does end of year look like for BTC?
Well, I mean, it's hard to predict, but I still have.
Do you think it hits 100?
Yeah, I mean, listen, I do think it's going to get through 100. If it goes to 100, it's going to 150. It's not going to
by the end of the year.
It doesn't move like that. If I'm right, it's going to 150
by the end of the year.
By the end of the year, if I'm wrong, we're probably going to trade in here. I think this is an asymmetric trade right now because if I'm wrong and it'll be roughly where it is right now at the end of the year. But if I'm right, I think it's going 150. I don't think it goes from here to 100. I just don't think that happens in something like Bitcoin. The big message is for your viewers and listeners: buy quality and hold quality. So everything that you just mentioned, I still hold. I think the weaker things like Polkadot and Avalanche, believe it or not, I still think are coming back. I just think we're in a bear market now for anything that's not Bitcoin. We're in a Bitcoin bear market, and then we're in an even more atrocious, raging bear market for crypto that's not Bitcoin. But the macro backdrop has been interrupted by the war, and the war is causing price increases, and the president will have to, again, these are my opinions, but the president will have to put ground troops in place in the area of Iran around the Strait of Hormuz. And he'll have to push the Iranians off the strait. And he'll have to set up the Navy in a way with minesweeping activity and literally police the strait. He'll probably have to get an international community in there, the Gulf states, maybe even the Europeans, because what you're not going to do, and Larry Fink said it better than me, you're not going to resolve the war, leave the regime in place, and have them threatening the strait. You're just not going to do that. You're also not going to have them hijacking people for tolls on the strait. And so you'll have a permanent plateau of 100, possibly even as high as $150 a barrel. That'll put the whole world in recession, especially the United States. So got the war started now. We can talk about the positives or negatives of it. No sense in doing that. The war started, and we got to get out of it. But we can't get out of it by leaving the Strait of Hormuz threatened. It's a 21-mile strait in terms of the width of it, and 20% of the energy of the world is coming through the strait, and they can't get it across Saudi Arabia by pipeline or rail. So it's just not going to work. So that strait's got to get opened smartly. Again, I think it's a terrible regime, and don't get me wrong, I'm not for them in any way, shape, or form, but smartly they realized they could hold us hostage by closing the strait. Remember, they can't beat the Israeli or the American military, but they can do sort of a North Vietnam thing and potentially try to outlast us by creating economic hardship in the world. So we got to get that cleared up. Once that is cleared up, you'll see a rebound in oil, meaning oil will drift back into the mid to low 60s, and you'll see that trajectory for interest rates return back to something that's slightly easing as opposed to potentially raising rates.
In the private market space, Scaramucci is extremely bullish on liquid death. At first glance, it's just water, but the real story is branding. Revenue grew from $3 million to over $300 million in 5 years. Products now sold in over 100,000 stores, strong appeal among younger consumers, unique marketing strategy. He calls it a masterclass in branding and predicts a potential IPO at around $10 billion valuation or acquisition by beverage giants. This reflects a broader theme. Disruptive growth isn't limited to tech. It can happen anywhere.
Well, I'm going to be aggressive here. I'm going to be optimistic. I think that they'll get the strait cleaned up in the next 2 months. And I see by midsummer, people will feel, you'll know when the insurance premiums are dropping on the tankers, but I think you'll get back to the mid 60s by midsummer. And I still think you get 2-3 rate cuts by the end of the year.
Wow, that's very bullish.
Yeah, I'm bullish. I mean, I also think that the prosecutor that's prosecuting Jerome Powell, I don't know if he did it unintentionally or by accident, but he admitted that he doesn't have any evidence to prosecute Jerome Powell. So at some point, that case has to get dropped, and a result of which Tom Tillis will remove his blocking of Kevin Warsh going before the committee and then eventually being voted on for Senate confirmation. So you'll get Warsh in place. You'll get two or three cuts at the end of the year. And there's another thing going on in the marketplace right now, which I think is overblown, and that is the destruction of software companies as a result of the advent of agentic AI and the fact that something like Claude can come in and start writing software code. So I'm going to just give you one name, SAP. So SAP has gotten its ass crushed. I think it is it's trading below or near its Morningstar fair value estimates. To me, it has very predictable cash flow, and it's gotten crushed because of the war, and it's gotten crushed because people are negative on software right now. But I think they'll come to realize that there's a big cloud business there, and there are other applications inside of SAP that I think are consistent, steady Eddie revenue generators. And there's a big moat about their business. If you think about all the people that are on their cloud, they're not leaving the cloud anytime soon. And so it generated $8.2 billion of euros in terms of free cash flow in 2025. It's heading for $10 billion of euros in 2026. And they just announced a $10 billion share repurchase program. Okay, so if you put all that together, the company's generating a return on capital of about 8% just in terms of munching up its shares. And I think you'll still get a 10% plus top line growth. So cheap valuation, average price target for Wall Street is about 340. The current price is, it's moving. So I have to look it up, but it was about 205 when I put this little selling document together for you.
Is this in your own book like you were before with Microsoft and Berkshire Hathaway?
Yeah, I just bought this. This is something I think will do very well. Look, you've got the Department of Justice investigation on the Teradata settlement. There's some investor skepticism about the new Joule AI assistant, which I think has been clunky for them, and they would be better served just teaming up with an AI group. I think Microsoft weirdly has had the best strategy, which is let these other people put up all the CapEx and fight it out on AI, and then I'll create a licensing agreement and get them on my rail system known as the iPhone, right, and the iOS system. But, the one-liner, SAP is a toll booth on global enterprise computing, and every company is modernizing. Every company that's modernized has to go through this toll booth, and they're about to enhance themselves with some AI overlay on their system. So I think it's very cheap. And I don't buy that software is dead because of what's going on in AI. I believe that software looks to most of Wall Street right now as uninvestable. And so you just have to see forward through that these companies are very smart. They've got a ton of free cash flow. They'll adapt around whatever the concerns are, the skepticism. It's a cheap stock and it's growing. And if interest rates are getting cut, I think this is going to be a real big winner. Well, it's a little harder to access. SpaceX was a little easier to access for people. But the name that I love right now in the non-public markets is Liquid Death. Do you know Liquid Death?
The water?
Yeah.
Yeah, they're sponsoring a lot of things, yeah.
So Liquid Death to me is one of these stealth brands doing, remember, what do you want to know about a brand? You want young demographics. You want people welded to the brand for different reasons. Some of it's flavor, some of it's the cool looking nature of the brand, some of it's the affinities that you just mentioned as it relates to the partnerships. We just took a position in Liquid Death. It's a non-tech name, but it's using tech guerrilla-like marketing. Okay, frankly, I think this is a masterclass in branding. Okay, their tagline is "Murder Your Thirst." Okay, and they are now going everywhere. They're going into Whole Foods. They're going into the local supermarket, the CVS, the drugstores. They went from $3 million in revenues in 2019 to their last reported revenues in 2024 of $333 million.
Nice.
Okay, so they're growing, and I'm not making these numbers up, 110x growth in 5 years. Okay, they've introduced iced tea. They've introduced sparkling juices and sodas. Okay, and they're just outpacing everybody in their industry. And I predict that they're going to get purchased. Okay, they're in over 133,000 stores now worldwide. They hired Goldman Sachs.
Sorry, you mentioned SAP was 205 entry. What's a good entry for Liquid Death on enterprise value?
Okay, so that's a good question. And I don't have a really good answer for that because we bought in at a $2 billion valuation. It's probably at a $7 billion valuation right now. And I would say that it's probably going to go public. And I think it probably goes public at a $10 billion valuation. And I would be a buyer on the public market because I think this thing is still growing like a rocket ship. And I think it will get acquired. Pepsi or Coke will acquire Liquid Death. And, just fully disclose, I'm a longtime Pepsi and a longtime Coke holder. If you hold Coke and Pepsi, you're getting the market's return with a above market dividend. And so I like it, and again, it'd be very hard to buy right now. We saw a round from Goldman at 1.4 billion. Okay. It was their Series E round in March of 2024. They did a subsequent round of 2 billion, which we participated in. But I don't know.
Those are great picks.
I think they're going to be, I think it's going to be a home run, that company.
When you step back, Scaramucci's message becomes clear. Bitcoin is following its historical cycle. Macro chaos is temporary but impactful. Opportunities exist where fear is highest. Innovation, whether in AI or branding, creates new winners. He sees the current environment not as a crisis, but as a transition phase, one that sets the stage for the next wave of growth.